drifted into the red as we speak. Dr. Reddy's, of course, is that one big, heavy point or rather weighing down point in the market. Other than that, of course, Scient also, it's almost a little bit of a free fall there. More than 17.5% is the kind of cut that Scient futures are currently sitting on. In the cash market itself, it's down about almost 19%. There's Syngene down 7.5%, and Mphasis as well reacting negatively to its numbers. So let me welcome on board Nitin Rakesh, the CEO, and Arvind Vishwanathan, the CFO, joining into the show right now. Nitin, hi, morning. Let me start off with you. Your revenue growth was up slightly by about 7/10 sequentially. What factors contributed to this performance, and what is it that we can expect then in the fourth quarter?
I think as we guided over the last couple of quarters, we've continued to benefit from two things. One, execute on the order book that we've sold over the last few quarters, and two, I think the pace of activity, both in terms of discretionary spend, to some extent, and also deal making has picked up. We guided for growth to be led by banking and TMT, and I think that's what's kind of played out in Q3, despite being a seasonally soft quarter. So I think those two have led the charge from a revenue perspective. Insurance also came in quite nicely, and that's what's led to the revenue performance as you see. Going back to the question around what we expect in Q4, we definitely expect Q4 to be in line with the earlier guidance as well, which is that we expect the full year to finish, above market industry growth. And then what that means is that we should see sequential growth in Q4 again.
Right. Hi, Arvind. Just wanted to get a sense on the EBIT margin front as well, because when we see the numbers, then they have declined marginally, almost a flattish sort of a growth, but the street was expecting a bit higher. So can we expect the margins to move up higher from these levels in the coming quarters? What is the outlook looking like?
So our EBIT margin for the quarter was 15.3%, and it was a 10 basis points drop and actually a 40 basis points increase on a YOY basis. Typically, Q3 is a seasonal quarter because there are furloughs and impacts around those, but I think our execution was strong to mitigate most of that impact. I think we have a stated guidance range of margins of operating between 14.6 to 16%. I think we are bang in the middle of that. I think, we are comfortable with that range, and I think that is what you can expect us to operate in.
Okay, Nitin, coming back to you, the new TCV for quarter 3 was at $351 million, which is the highest in the last 6 quarters. Who contributed to this rise? What segments are doing well? How are you ensuring faster TCV to revenue conversion?
Yeah, I think we are pleased by the pace of deal making, as I mentioned. We've obviously had some really good quarters in the past as well. This is a 6-quarter high. 2 or 3 things contributing to it. One, we had 5 large deals. Anytime you have such a large number of large deals, again, I think a 6-quarter high, that definitely gives you a boost in terms of TCV wins and order book. Again, if you look at some of the examples we've given, I think we've seen good wins in BFS and TMT, as well as in the travel vertical. So I think it's a combination. It's quite broad based. It is spread out across some immediate conversion deals as well as some longer term deals, and also more importantly, the pipeline is up as well in the same period by almost 23% quarter over quarter. So robust activity in terms of origination of deals, good activity in terms of closure of deals, and improvement, I would say, in terms of pace of revenue conversion, which is what you're seeing play out in the quarterly revenue as well.
Right. Nitin, while BFSI and TMT showed growth, logistics and other verticals did see a decline. What's the outlook for these weaker segments?
Yeah, I think we have some work to do in a couple of verticals, both in terms of deal wins and more importantly in terms of just broad basing that growth. Again, Q3 was a little bit of a seasonal dip as well in some, but more importantly, I think the pipeline looks pretty interesting, both in terms of our healthcare business as well as our logistics and travel business. So we just have to continue to execute and get those back on the growth path as well, and that's what our expectation is over the next few quarters.
Also give us a sense on discretionary spending as well. Is that showing any signs of recovery, and what geographies and verticals are you seeing recovery in?
I think for us, at this point in time, from a geo perspective, 80% of our revenue is US and Canada. North America is continuing to, I would say, trend in the right direction. We called for a bottom in our business about 4 quarters ago, and I think this is the 4th quarter of sequential growth. And of course, as the sequential growth has picked up, the YY growth numbers have also kind of started to look better. So we do expect most of our core businesses to be in that segment of improvement in outlook, both from a macro perspective. Some of the uncertainty around geopolitics is a little bit better at this point, and as is the uncertainty around US elections is gone as well. So I think the confidence is a little bit better. Budgets are fairly stable with a slight uptick. Especially in banking, you can see earnings have been very strong. So I think that the direction of travel seems to be in the right direction.
Okay, but Nitin, also talk to us about your EMEA revenue that's fallen 5% sequentially. What are the challenges that you're seeing in this region, and can we expect to see some sort of recovery here?
Yeah, I think, again, remember, most of our Europe business is BFSI centric. So there's a little bit of that impact from a seasonality perspective. We will see that recover back up in Q4 and beyond, because again, deal activity is pretty good there as well. There's, in general, I think the pace of discretionary recovery in Europe will probably lag the US by a quarter or two, maybe longer. I think there's some serious reset going on in the geopolitical environment there, and spends aren't really where they were 2 or 3 years ago. So a little bit more time needed for that region to recover. But from our portfolio perspective, we are very focused on the whole BFSI segment in Europe, and we'll continue to play that out as best as we can.
Right. What about your AI ops and modernization driving large deal wins and pipeline growth, Nitin?
I think we mentioned this over the last few quarters, the ability to stitch a solution that is either bending the cost curve quite dramatically, creating savings, and then giving the ability to move those savings into a transformation program. I think it's never been better, as it has been in the last couple of quarters, because of the maturity of some of these AI platforms, both third-party platforms and the work we've been doing in building these up. AI ops is an interesting one because you can now start eliminating a lot of manual effort that still sat in IT operations, of all forms. Modernization is an interesting one where you actually can unlock the ability to actually drive that change, because the certainty of outcome is higher, the time to market is higher, and of course, you can also bend the cost curve there. So I think it's an interesting inflection point. We expect very much to continue to see higher adoption of some of these platforms into enterprise systems through the remainder of 2025 and beyond.
All right, Nitin and Arvind, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us on the earnings for Mphasis this time around. But for this, viewers, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, we'll keep continuing with the market action, but just on the other side.